Today, I'm going to talk about Oracle. Oracle, the company, if you saw the news recently, this was doing so well up until this past week, and it's plummeted. The prices are going down. But as you know, Oracle is very important for the future of AI, at least in the US. And so I want to talk about Oracle today, plus the magic of the third week, the third Friday of every month. And the reason why I say magic is because you will command higher premiums when you want to sell options the third week of every month. Let's jump right in. And back to my favorite charting software, we're gonna start with charts. That's where it all begins. Let's take a look at Monday, December 8th. Okay, that's a week ago. And so from there, look, it's gone up here down to about 15% drop. That's in a week. However, if we go back to September 10th, it's gone from 345 down to 190 at about a 45% drop. And I just want to show you that if you look at their earnings were pretty good, right? I mean, 37% increase and a slight decrease in the revenue. Now, of course, right now it's out of favor. Recently, there's been news about Oracle just taking on too much debt to expand their business. But I do believe that Oracle is a major player for the future of AI, and it will recover and pay back those debts. Now, of course, I have to preface everything. I'm not a financial advisor. You have to do your own research, but this is my positioning now. And I'm going to switch over to what my next move is. So if we take a look at Oracle, so about 190 finished on Friday, 190, and post market, it was down a couple dollars. The third Friday of every month is the monthly expirations. Personally, I like to do weeklies, and it's every week, every Friday of the month. I like to sell options and collect little payouts. And if you watch my future videos, I talk about the steps on how I do that, how I find lower strike prices to balance out the payouts with safety. Safety for me is number one, but consistent payouts is also very important to me as well. Now, okay, I won't overtalk too much. Oracle here is uh, post-market 188. So the fun question is, if I put in options trade for Oracle and sell it, how much can I get on Monday? And this is what I'm looking at. Okay, here's the options chain. I'm going to sell a put. Now, if I sell a put below 190, I can collect different premiums. I can collect 373, which is $373. Can collect $1 at 177.50 put. That's $100. If I go down to 170, I can collect $38. Okay, so 373 to $38. Pretty big range. Question is, how do I pick the strike price? So I'm going to flip back to the charts for Oracle. Here we go. And generally, I don't like to overanalyze things. I like to keep it very simple, and I will show you how I'm going to do it. I'm going to start with the fib retracement tool, which is right here. If I highlight it, fib retracement. And I'm going to start at the swing low, which is the low point, and then the swing high is here, the high point. Start here and run it up here. All right, and you can see that we had pulled back at all of these levels, 0.5, 0.618, and a deeper pullback would be at 0.786, which is 168. All right. Now, what's very interesting is that we have a gap right there. So I'm going to put horizontal line right here as a possible pullback support level. Support is a structure where when the price touches it, if it's strong enough, the price will bounce off and reverse direction to go up. So that's a possible price target. I'm going to switch to the monthly view. I'm going to zoom out. Here's the monthly view. And you can see I picked this as a swing low. I'm going to keep the swing high the same. But what if I move this down to this swing low? And here we go. All right, what's very interesting, look at that. This touched the 0.786. This comes, the 0.618 comes at about 170. And ooh, I like 170 because that's a pretty even, well-rounded number. And I talked about this in previous videos. Psychologically, sweet spot. All right, so I'm gonna put a horizontal line right about there. All right, and then take a look, right? Resistance, support, support, support. Okay, and then we got close enough to support here. So 170 is not just a 0.618 fib pullback support level, but it is a major monthly support resistance level. So this is pretty solid to me. All right. Now, so 168, 170, 170 is a good, strong support level. Let me swing back to the daily, and I'm going to zoom out just a little bit. All right. Is there anything on the weekly? Let me just take a quick look at the weekly charts. All right, if we take a look at the weekly charts, uh, so this is a support zone. These are support levels that I had talked about. But what if I draw a line right in the middle there? Is that a possible support level? Okay, not to make it too confusing, but what I'm trying to do is see it from the daily, weekly, and the monthly view. Because if I'm able to find a support level in between, like I would command a pretty good premium at 170, 177, that would give me, let's take a look at the premium. 177, that would give me 110. Oh, okay, about $100. And that would be a delta of 0.15. So that's a pretty safe bet, right? 85% chance that you'll walk away keeping the money and nothing happens. $100. Not bad. And the reason why the third week, okay, the third Friday of every month has higher volatility. And this is something I'm going to explain why right now. And this is something you always want to keep in mind. The third Friday of every month, you're going to generally see bigger price swings. And that is the week where when I'm selling options, I'm being extra careful and anything goes on the third week. The other weekly options before and after have lower volatility, which means the price doesn't move around as much. The third week is a different story. All right. So a lot of times I would jump on a trade on Monday, Tuesday, early on in the week, sell it, and then a couple days later, that premium doubles, triples. That's how fast price moves on the third week of every month. Just jot that in your mental note and always keep that with you when you're trading options. Really good tip to hold on to whenever you do options. Okay, not to just keep hammering the point. So 177, $100 at 85%. But because there's bigger price swing possibilities, if we move down to 175 to 172 to 170, so these are the prices that I'm looking at. And sure, I can get if I compare 177 with 172.50, I can get twice the premium. However, if the price does go down to 172.50, that's a $500 buy-in difference, right? Remember, strike price is a price that you agree to buy the stock, right? You're not going to buy it at 190, so it's still a win. You're buying it either at 177.50 or 172.50. And so $500 is a big difference for a $50 difference in premium. So for me, $50 versus $100 to save $500 in a better entry price is worth it. And I'll take $50 for a quick trade like this any day. If I can buy Oracle and get in at $172.50 per share, that's fine by me. And as you can see, that line that I drew in between falls at 172.75, and you can see that's a pretty good resistance, support, resistance, and so on. All right, on the weekly chart. So just to wrap things up, Oracle has fallen a lot. Prime target for selling puts. It's a good long-term stock, in my opinion. Number two, it's monthly expirations, third Friday of every month, the third Friday. Lots of volatility. Higher volatility means bigger premium payouts for selling put options. Good. And then when we look at what strike prices to buy, I like to use the Fib retracement tool and zoom out weekly, monthly, and see where the support levels all stack up together, right? They can stack up within the same time frame. Like we have the Fib stacking up with the support levels, but it can also align with support levels on different time frames. All right. So charts, very powerful. Learn the techniques, how to read them. Once you know how to read them, it's a game changer. All right. You're not blind guessing. You're making quick, educated decisions with confidence. That's it for today. It was great to have you. And if you found today's video helpful, go ahead and subscribe. I look forward to seeing you again in future videos. Until then, have a great one.